Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. The main pattern here until last week had been the late April to mid-July bearish Andrews pitchfork. However, prices started acting erratically 3 weeks ago, with a failure to push down below the 38.2% Fibonacci line of the big 25 to 26 move at 16,210, and instead turned back upwards and out of the bearish Andrews pitchfork. At least in part, I think this is due to the market getting eroded from late June by a combination of the push below the gold long moving average, currently at 16,975, and the bright red neckline extension, currently 16,575. That's of the July to November 2024 head and shoulders top. I should point out that there is no possibility of finessing this acutely bearish Andrews pitchfork to a shallower bearish shift pitchfork. So now it's broken, well, that will be it, and I will retire it next time. So what now? Well, I asked the same question 2 weeks ago and every week in between. I gave this response back then, and I quote, "We could look at the whole mid-December 25 today action as a very large double top pattern, even Eve type. If this becomes true, then the opportunities on the downside are quite considerable. The bright red neckline previously mentioned could also act as a neckline for the very large double top, in which case we have breached it today and are on the verge of breaking it, thereby giving a primary target X1 down in the 15,155 zone. A secondary harder to reach target X2 down at the bottom of my daily chart at 13,305. I may have been a bit presumptuous with labeling them as targets, as we haven't fully confirmed the pattern as yet, but I expect if I left it too long, it may have been too late." End of quote. These points, well, they may have looked good back then, but they do not look so good right now, as prices have started to hook upwards, mostly within a channel of sorts, currently at 16,865 to 17,280. And we are now just above both the gold long moving average and also the 50% Fibonacci line of the 16,935. However, I'll still keep them on my daily chart for now, as altogether these suggest a possible recent descending scallop pattern, a pattern that looks like a backward letter J and is usually around 8 out of 10 times a bearish pattern. But it is early yet, so we'll keep this in mind. We now need to see if this market will halt its ascent and form a lip to this pattern. LME 3-month zinc. We are still here on this daily chart for a 10th consecutive week, still within the same big old pattern. And it's a big one, plus a more recent smaller pattern and a newer developing one, which looks really interesting. The big old pattern is the bright red May 23 to April 25 bullish Andrews pitchfork, and especially cuddling that middle time, currently at 35.24. Then there is the more recent second pattern, the dark blue 2025 to March 26, April 25 to March 26, bullish Andrews pitchfork, the market a little below the slightly more acutely rising dark blue middle time. It's currently at 36.54. Now, there was also another pattern, unhighlighted, that had been completed by breaking lower below the lower bullish channel line, and that's of the April to late June bull channel. This is quite a wide broken bull channel, and we only stabilized below it 4 weeks ago. Nevertheless, as I also said 4 weeks ago, and I quote, it does give us possible targets below the primary target X down in the 34.73 zone, arguably a target that which was reached, along with a secondary harder to reach target X1 down in the 33.58 zone. in between two important 50% Fibonacci lines. Well, we have been close to target X1 4 weeks ago. If it wasn't for one thing, the third pattern, the newer and developing pattern I mentioned at the start. You see, the action since early May to date initially set up the opportunity for a triple top, a somewhat ragged one with aspects of a head and shoulders top about it. This pattern depended on one thing, and that was a confirming break below the 3440 zone, which so far hasn't happened, as prices only made one clear close under it and one right on it. Plus, the Mauve medium moving average, currently 34.26, stepping in as a support, knocking prices higher. Keep your eye on that Mauve medium moving average as it is rising up slowly but still rising up towards the market. However, that was not the only news. You see, this original bull channel, which became a triple top over May and June, has morphed yet again into a bright green descending expanding wedge pattern, currently 33.04 to 36.26. This pattern, which 4 weeks ago gave support to the market, has recently provided resistance, which is why it's so important. Additionally, this pattern already had the requisite number of touches per side, so I would watch very carefully for which way the market breaks out of this pattern, upwards or downwards, though we are closer to upwards right now. However, as I said last week, and I quote, "Be especially cautious about false breaks in either direction." Like I said earlier, all very interesting. End of quote. LME 3-month tin. In the big picture, the market here since March has been moving up from the very shallow bright red middle time below, currently at 41.575, up to the very shallow bright red upper time above, currently at 58.995. Of the one big old pattern still even now dominating the market, and that is the bright red, shallow, big old 2020 to 2022 bullish shift pitchfork. A pitchfork that is still in operation 4 years after it was created. Most recently, the market has seen the possible creation of an early May to date head and shoulders top, a bright pink neckline currently at 50.860, which 4 weeks ago we were on the verge of breaking lower. But then 3 weeks ago we moved back up away from doing so, and since then stabilized, if at a higher level, to the bright pink neckline. Last week I was even considering whether the head and shoulders pattern may be a continuation pattern rather than a topping pattern, or maybe even something else. But for now, I will stay with this possible head and shoulders top pattern, though I reserve the right to change my mind on this. Anyway, 3 weeks ago I gave the following ideas about this possible head and shoulders top pattern, and I quote, "I feel obliged to set out possibilities, not targets you understand, but possibilities, as we haven't confirmed the break lower as yet, and I would rather have some numbers out there in case we do see a true break lower in between my commentaries. Thus, a primary possibility would be down in the 47.310 zone, a secondary harder to reach possibility down in the 43.660 zone." End of quote. Right now, these possibilities are a bit of distant possibilities, but I will keep them here for another week. This failure to push lower ties in with an item I discussed 12 weeks ago when I spoke about a piece of congestion which became very relevant in mid-May to mid-June, and again over the past 3 weeks. And I quote, I would look closely at the 2022 high at 51.005. This may not look that great a congestion as at first glance, but it was instrumental in making the center of the double bottom mid-February, and would thus not ignore it. We also have some Fibonacci levels for the whole of the 2026 move at 47.595 and 49.775 and 51.960. End of quote. These levels, especially the 51.005 level, have become very important in recent days, and consequently, we have the makings of some layered support below, starting from 51.005 and heading lower, whilst above we did have the green short medium moving average, currently 53.505. But we seem to be using that as an attractor right now, though we do have all the congestion seen in May and June of a head and shoulders top pattern, or head and shoulders pattern, mainly above the market, but a pattern that seemingly has not been overly happy right now with being a head and shoulders top, but which may have aspirations into being a possible head and shoulders continuation pattern. So please be cautious. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.